Yo, hey man, say man, how's your day, man? It's Forever Trader GDO coming out with another video, man. Let's go ahead and get into this video. Getting these charts. I ain't about to waste y'all time because I don't want you wasting mine. Y'all want to learn how to trade? I'm gonna teach you how to get paid. Ooh, you feel me? Yes, sir. Y'all know my baby sleep. Y'all know my baby sleep, so stop playing, bro. All right. I mean, like I told my Discord today, like I told my family members in my Discord, I hope they took advantage of this buy. I don't think it's gonna be an easier trading day the rest of the year. Then I don't think there's gonna be an easier trading day than this for the rest of the year. Right, we're in the last quarter, right, of the season. I don't think there's gonna be an easier day. Now, of course, when we come to the market, what we're doing is we're going to our higher time frames. Okay, so as you can see, I mean, right here, when we go to the monthly, I know it's small, but you gotta respect them all. You hear me? You feel me? What is a fair value gap? What is an inverse fair value gap? What is a gap? Just three candle patterns, you know what I'm saying? So 1, 2, 3, opening between the first and the third. As you can see, this wick right here is the first candle, second candle, third candle. There's an opening between that. It's small, but it is definitely relevant. All right. So of course we don't have really any more. We have one down here, but that's not getting touched, right? So then when we go to our weekly, it's like a top-down analysis, right? This is what you should do every Sunday before you even think about entering the charts, right? So for the weekly time frame, we have 1, 2, 3 relationship between the first and the third. Boom. Up here, inversion, you have 1, 2, 3. Yeah, it's nasty because it's gap, but it's still a inversion. It's still a fair value gap. So 1, 2, 3, opening between the first and the third. Mark that joke out, and then you just go on down the list, right? Until you feel like you're satisfied and you have enough information to help you make the right decisions on your trading day. All right. So of course, when we're looking at these internals, it's about relevancy. Most likely to be interacted with by price action. So 1, 2, 3, opening between the first and the third, fair value gap. 1, 2, 3, relationship between the first and the third, fair value gap. All right, and then we move it on down. Okay. Obviously, we have this big old internal right here, 1, 2, 3. But because at the time, my 2-minute exterior high and 2-minute exterior low was in that 4 hour, I didn't use that one. What I did do though was come here. I came up here. One, this is the wrong green. I came up here. Being that this internal goes from right here all the way down here, it looks like this. This is a pretty big internal, and I don't necessarily like having my internals this big on my screen. So to avoid all that confusion, I just pick an inversion, all right? So 1, 2, 3, most likely what price is going to interact with, okay? Then once I do that, I look for everything top, above, and below. We go to the next one. 2 hours. Very easy, guys. I'm not gonna lie to you. We do make things complicated. Naturally, humans make things complicated. You have to practice intelligence. Intelligence is simplifying things, right? So when you come to the 2 hour time frame, of course, if my 2-minute exterior high is right here, 2-minute exterior low right here, I have me a 2 hour inversion, right? It's only been passed through once. Yes, it's been interacted with, but it's been passed through once, so it's still an inversion because that's the definition of an inversion. All right, so 2 hour inversion, as you can see, and then this one. Okay, so yeah, so let's fix that. All right, so it's been passed by twice, but I leave it there just to see if price is going to actually respect it and react off of it, right? So being that we have all the internal highs, our internals from the monthly down to the hour marked up, we go to our 2-minute. And at the time, our 2-minute high was at 912. Our 2-minute external low was at 906. All right, so my thought process for this trade is, all right, if I'm coming in and 930 comes and we break structure to the upside, well, the exceeded edge model states that we are looking for a break after 930 After that break, ask yourself where is the nearest high time frame internal, okay? If the nearest high time frame internal being from the hour plus is far enough for you for it to make sense, right? Catch price to that area. If it's close, it would probably behoove you to just allow price to make contact with that internal and then react from that internal, meaning a break, to a break of structure to the opposite side, or just a continuation, a break to continue the direction that price is already going, right? So for me, and I did wake up late. I ain't gonna lie to you, I woke up pretty late. But cause how did this happen? I woke up late on the freaking couch and I looked at my phone. And I was like, okay, well, obviously that big old candle is a break of structure, so I would have gotten in right here because, of course, you're looking at the time on the side. Like on my iMac, you have the time to when the next candle is going to close. So I would have already joined, all right? So I woke up late, but I seen that we broke structure to the upside. And I don't know if that's really break structure, but we broke to the upside. Well, if you do the calculations on how far the nearest internal is, which is this 2 hour inversion, it was about 56 points. Well, for me, trading at uh 5 contracts to 10 contracts, that's a lot of money for me. It's not really something that I should really stress about, okay? Because I'm either going to be trading at $10 a point, which is 5 contracts in futures, or $20 a point, which is 10 contracts in futures. So again, the exceeded edge model states that break after 9:30. When that break occurs, ask yourself where's the nearest high time frame internal. High time frame internal being fair value gaps, inverted fair value gaps. Where's the nearest one? Okay, from 1 hour plus. For us, if it's far, we catch price action too. If it's close, we just allow price action to make contact and react out of that. All right. So for today, it was a very easy trade. That's why I sent to my Discord. I hope everybody took advantage of this easy trade. I don't think the trade is going to be easier coming this December in the last quarter of this month. I meant this year. I don't think so, right? So I hope everybody got their money worth because it was a very simple trade for me. I didn't have this 2 hour marked out before, so what my chart really looked like before I came back and marked it out, it looked like this. I didn't mark out the 2 hour. I didn't see it, to be honest. Again, I woke up late, but I didn't mark out the 2 hour. So what it really looked like was this. 126 points from the break. In my eyes, the nearest high time frame internal was 126 points away. So in my head, it gave me the okay to enter in my trade. And I left with about $610 today. So, I mean, very easy trade. And that's with waking up late. Not saying that's something you should continuously do because discipline is important when it comes to being a trader. You have to be disciplined. You have to be able to replicate a system no matter what you did last night, what you had going on. You have to wake up and execute. That's all that matters, right? Mentally, and monetarily, right? So that's pretty much it today, man. And then the thing about people saying that fair value gaps, inverse fair value gaps doesn't make a difference in trading, I would never hold a conversation with those people because obviously they don't know what they're talking about. Like I said, I've been trading for 7 years, okay? So, and I didn't start off with YouTube. I just got in and lost money, and lost money, and lost money, and lost money, and really bust my behind, okay? The formula to trading is internals and externals, right? Internals being the fair value gaps that we just went over, externals being the high and low of the time frame. Every time frame has internals and externals. Let's see if we can find something. Today. All right. So what we got right here? So right now, if we're looking at the 4-hour time frame, the external high for the 4-hour time frame is right there. The external low for the 4-hour time frame is right here. So yes, you guys see these wicks, and yes, these are externals also. These can be externals. It just depends on how you want to cook your food, okay? When I mark up my externals, it's based off of break of structures, okay? Sometimes I use the externals like that, but only when it comes to marking out external liquidity. And today, it really didn't give us much. It gave us external liquidity to the downside, how I mark it up, but that's not necessarily to the upside, because if I would have awakened the correct time like I supposed to, I would have marked out this guy, for an external low to go get, which would have made sense because it's right by this. But we probably, if we would have broke down to the downside, most likely we would have gotten a reaction because it's contact, reaction, execution. So contact with the internal, reaction, which is a breaker structure, execution. If we would have broken down to the downside, we would have came in contact with this hour internal, broke structure back to the upside, and then I would have caught it up there, right? But how I would have looked for my externals to be marked out on this would have been like this. And I would have just targeted these. But of course, we didn't go to the downside today. We went to the upside. And when I look to the left for my externals, there's nothing really up here. Like, yeah, I guess I could have marked out this guy right here. And I would have, so I don't know why I'm saying I guess. But you could mark out this guy right here. But realistically, it's like, he's way up here. You know what I'm saying? So there's nothing really to complain about today. Very easy day. Come back tomorrow and see what it gives us. I know we have Thanksgiving Thursday, and I can't necessarily remember what happened last year Thanksgiving. I think I made money last year, if I'm not mistaken. Like, I don't know, because you got to understand, the trading community or the atmosphere is very much like monkey see, monkey do. If one person says this and it kind of looks like they have some validity to what they're saying, everybody and their mother is going to follow it, and it's just like a folk tale. It's like playing telephone. Right. So a lot of people make you feel as if you can't trade these holidays. And yeah, I understand where they're coming from. Why do that? We're looking for high probability trades, meaning the market conditions need to be there. But life is life. People need to pay bills. People have things that they're trying to accomplish. So what I've seen over the years is, yes, these holidays slow things down, but it actually be those holidays that be the cleanest price action. And it's something I'm still trying to figure out to this day, man. Again, I've been reading charts for 7 years, and I still don't understand it. Those bank holidays that most people do not want to participate in, those are the days where price goes crazy. Quick 200 points. And again, 200 points for me is $2,000 plus. All right. So you have to really get into this industry and find and figure it out for yourself. You can't listen to people when they're just telling you. Because when I first started, man, I remember when I first started, my bro Randall was like, you can't trade Sunday, Monday, don't trade Friday. Well, I'm like, geez, boy, I'm like, I can't trade Sunday, I can't trade Monday. That means I got Tuesday, Wednesday, Thursday. That's only 3 days to trade. You tell me I can't trade Friday. Yeah, man, you can't trade. You only can trade between 9:30 and 12. You can try 2 o'clock, but really 9 and 12. I'm like, dang. Now there's validity to what he's saying, but that doesn't negate that you can actually trade whenever, right? Yes, volume is better in certain sessions because the New York session, of course, is for the U.S. instruments, all right? You have London, you got Asia. So, of course, those instruments that belongs to those time frames will do better because of volume. That's when those people are up. That's when their business is actually up. They're getting their money. That's when those people are up. But I can tell you from experience, man, as long as price is coming in contact with the internal, all you have to do is find that external. Every time frame has 2 objectives: internals, externals. Internals being your fair value gaps, inverse fair value gaps, and gaps. Externals being your high and low. And for me, when I'm saying high and lows in regards to breaker structures, okay? So, yeah, man, pretty easy day. Hopefully tomorrow is the same. Last week was pretty good, too. I'm not going to lie to you. But it wasn't as easy as today was. We just got done touching this weekly inverse. This inversion. So, inversion, fair value gap, 1, 2, 3. Opening between the first and the third. You see what price did once we touched it. We touched it and we went right back up. And now what we should be doing, because this is the external high, which low-key probably is an all-time high. This is an external low. All right. Being that we touched the weekly, there's 2 weeklies right here, actually. One right here, one right here. Being that we touched the weekly, we should be going to touch the external high on the weekly time frame, but we have a weekly inversion. So what that's going to cause, and I want you to remember this, there's only 2 things that's going to happen. We're either going to come from up here, come here, break, or because now we're sandwiched in between 2 weekly time frames, which we did the same thing last year. I don't know if it's just because we're coming to the slower end of the year. The last quarter is the slower, but this is setting up exactly how it was last year. You have high time frame internal sandwiching price action, which is gonna do nothing but cause this action here until one of them gives up, right? That's all it is. That's literally all it is. Trading is nothing but boxes and lines. So, hey man, I hope you're having a good day, man. It's Forever Trader G coming out with another video. If you guys want to learn how to trade like this or trade with me in the morning, man, join the Discord. Free game, free sauce. I'm not selling you nothing. I don't need your money, man. Just get around like-minded people. Get around people who actually know what they're doing so you can learn what to do and change your life. Have a good day, man.